My name is James Bridgeforth. I'm a young and very successful investor, and in this video, I'm going to break down exactly how you, a beginner investor, can understand a company's balance sheet, income statement, and many more tools so you'll be able to identify companies that you should consider adding to your portfolio. This is going to help you identify a strong company versus one that's headed for major trouble. I'm going to break down exactly how these financials can set yourself apart when analyzing companies, and I'll also provide you with a checklist that you can use every time you're trying to evaluate or analyze a new company to invest in. First, I'm going to get into why these financial statements matter when analyzing companies. Previously, I made a video on my channel where I spoke about how to analyze companies against each other. In that video, I actually used Google Finance where I would compare the two companies based on their PE ratios and many other things. But there's some things that you really have to understand when analyzing a company. There's a whole new world to it. There's a layer that we have to peel back when analyzing companies that you haven't really seen before. See, my last video was really just surface level for many of the beginner investors, but now I'm going to take it a step further and unpeel this layer and let you see the balance sheet, the income statements, and many more, and this will help you identify, is this a company that I should be investing in? How has this company performed over the last 4, 5, 8, 10 years? And is this company, when I put my money into it, going to perform that same way, or is this company headed down the wrong path? So first I want to dive into understanding the balance sheet and how to look into it. So the balance sheet is basically just the financial health of a company during a certain period in time. So let's pull up a balance sheet right now to see how this company is doing and how it's done over the past years as well. So the company that we're actually going to dive into today is actually going to be Meta. When you're looking at Meta, you want to look at these three things. You want to look at the company's total assets, which is going to be $276 million for Meta. You also want to look at the company's total liabilities, which is going to be $93 million for Meta. And you also want to look at the company's total equity, which is going to be $182 million. And I'm going to show you why this is very important in the balance sheet and why you need to take notes and understand how this could benefit you in your investing journey. So when you're looking at these financials, this is what you want to look for. You want to look at the assets to liability ratio. So you want to take the assets divided by the liabilities, and that's how you would get that ratio. A good company should always be between 1.5 and 3. Now, if you divide the total assets, $276 million, by the total liabilities of $93 million, that will get you 2.95 for Meta, which means that it's between that threshold that we like of 1.5 and 3. That means that Meta is a good company comparing it to its total equities and liabilities. Now, the second thing we want to touch on is the debt to equity ratio. This is another thing that not many people look at in the financials, but it's very important. So you see here that we have $49 million in total debt. Now, when we look at the equity, we are going to have $182 million in equity. So you want to do the exact same thing. You want to take the total debt divided by the equity. And for a good company, it should actually be less than 0.5. So in this case, you can see that if you divide the total debt of $49 million divided by the total equity of $182 million, that will put you at 0.26. That is a great spot to be in because it's less than 0.5 of our threshold and what we require a good company to have for us to consider even investing in it in the first place. So we can see that Meta is a very strong company on the balance sheet so far, and maybe we should consider investing in it. Another thing that you want to look at when you're investing in a company and looking at their financials and balance sheets is that you want to see that the company has been performing well over past years. So we can see in the total asset column, this is going to be in 2021, we can see that Meta actually was sitting at $165 million in total assets. But since then, we can see in 2022, it went up to $185 million. And then the year after that, it went to $229 million, and we're currently sitting at $276 million. This is very important as well because you want to see that the company has growth over long periods of time, and we can understand by looking at these assets in this asset column that Meta is growing in their assets over time. So another thing that you want to look at as well is going to be the equity. So you want to see growth in equity over long periods of time as well. So we can see that right here we were at $124 million. Then we were at $125 million. So we had a slight jump. And then we had a major jump in Meta where we went from $125 all the way to 153 million, and we kept on that pace where we're sitting at 182 million. Meta has one of the best balance sheets and financial statements out of all the companies in the stock market, and this is why I'm actually a shareholder in this company as well, and why I believe in it long term, because you can see that it's been performing well over the last 4 years when we look at its balance sheet. Now that I'm talking about all the good things that you can identify in a company, I also want to talk about the red flags that come with it and what you should be looking out for when investing. So we can see right here that some red flags would be a high debt with low cash. So we can see right here that the total debt is going to be $49 million. Now, if we want to go to the cash, we would just hit expand all, and we'll be able to see the cash right here as well. So you can see that the cash and the cash equivalents are sitting at $77 million. And when we collapse it again, we can see that our debt is sitting at $49 million. So you always want to make sure that a company has high cash to low debt, and you want to make sure that that ratio is really good. So now we can also look at another thing that would be a major red flag, and that would be shrinking equity. The same way that we see that the equity is growing in Meta over time. Now that would be a red flag if we saw that this was 124 million and then we went to 120 million in 2022, and then we just continue to go in that sharp decline. But since we have a growing equity in Meta, we can deem that this is a great asset and a great stock to consider investing in. So that's going to wrap up the balance sheet, and now we're actually going to head into the income statement, which is another very important financial that you need to consider and need to look at as well if you want to uncover and dive deeper into these companies that you're investing in and understand, what are they doing with this money? How much money are they making? And are they profitable? And is this something I should take advantage of? So now that we're over at the income statement, so some things that we want to look at is actually going to be the total revenue. We want to look at the cost of goods sold. We want to look at the gross profit. We want to look at the operating expense, and then we also want to look at the net income as well. So when you're looking at these things, you want to see, okay, we got the revenue. The revenue is basically all the money that you get before you pay any expenses. So let's say that you sell t-shirts, for an example. And let's say you sell 10 t-shirts for a total of $4. So you would take 10 times 4, and that would be the $40 would be your revenue, but that's obviously excluding the cost of production it took to make those t-shirts. So you get what I'm saying when I'm saying total revenue is just everything before expenses. The next thing you want to dive into is the cost of the goods that were sold. So basically that's self-explanatory. Cost of goods sold is how much did the items cost that you ended up selling to your consumers or customers. Now when we dive into the gross profit is basically the revenue minus the cost of goods sold. So we can see that we have the revenue right here, then we will subtract the cost of goods sold, and that's basically how we would get our gross profit, which is sitting at $139 million, which is very good for a company like Meta, because you can see that they're highly profitable and that they've also been performing and continually growing their gross profit over long periods of time. So you can see right here they were at 95, took a slight dip, I'm assuming because of the recession and COVID, and then we're going to have 91 million. Then we go to 108, 134, and 139 is what we're currently sitting at. So you can see that their gross profit is continually rising as their revenue and cost of goods sold is differentiating out, and you can see that we're continuing to be profit in this company as well. So then you also want to look at the operating expenses. That's just basically how much it costs to run the business. Those are just the basically the fixed rate and the fixed expenses that the business is going to have to pay year in and year out. So then when we go to the net income is basically going to be your bottom line. So your revenue is your top line, your net income is going to be your bottom line, and the net income is actually going to be the gross profit minus the operating expenses, minus taxes, and minus interest. So that's going to be basically how much does the company get to take home every single year. So we can see right here that our net income is actually going to be $66 million. And you can see that the total revenue is around 170. And based on all these amazing financials, you can actually see that in the income statement and the balance sheet. And you can understand that Meta is a very profitable and a very good company. One of the best financial statements you're ever going to see from any of the companies in the stock market. Don't get me wrong, there's many others with great financials. Meta is just the one that I chose to use for this video because it's one that I own in my portfolio. It's also one that I really believe long term in the future, what they have going on with AI and meta technology. So I just wanted to pull these financials to show to you guys. And then I also want to show you basically a checklist that you can use when you're investing. So you can go through it and you can look and see, okay, let me just go through my checklist and make sure that the company that I'm investing in, when I look at their income statement and I'm looking at their balance sheet, are they able to check all the boxes on my checklist? And is this something that I should consider investing in? Now, here's a checklist that I use. It's going to pop up on the screen for you all. And it's going to be, is the company profitable? That's going to be our first question. So if the company doesn't check that box, then maybe you should consider not adding it to your portfolio. Then we're going to look at, is revenue growing year over year? Has this company shown that over long periods of time it's able to sustain growth? And is it able to grow over time? And is it going to continue to grow when you put your money into it? So that's going to be our second checkbox. And the third one is going to be, is debt manageable? Are they able to manage their debt? How high is their debt ratio? Are the margins healthy? That's going to be our fourth one. So if it checks all four of those boxes, maybe you should look at it and consider, is this something I should invest in? Is this something I should add to my portfolio? And this company has been performing well. Why am I not taking advantage? Then after that, you can go and look at the percentage returns year over year, see how it's done over the last 5 to 10 years, where it's going to go in the next 5 to 10 years. Maybe look at some news reports. See, how is this what is this company coming out with? Are they trying to integrate AI into their technology? How is it going to do over long periods of time? And once you've done all of those things, look at the balance sheet, the income statement, and everything that I've taught you all so far, maybe you can deem that this company is something I should continue to invest in, and maybe I can get great returns on my money and separate myself like I never would have before. So everybody watching this video, I encourage you to at least evaluate one company this week, getting the habit of evaluating companies and understanding how to look at their balance sheet, their income statements, and really understand how to evaluate these companies on a much deeper level than you would have thought of before. So if you like this video, feel free to like, comment, subscribe, turn on that post notification bell so you never miss an update, and I'll see you guys in the next video.